Friends, we will continue with the topic of capital gains. In the last session, I started with the capital gains and we discussed what is the charging section of section 45, and then we also completed the definition of capital asset and what constitutes the transfer. Then we discussed how to compute the capital gains under section 48 and the different provisos of section 48. Now, in this session, broadly I will be covering what is the cost of acquisition, what is the cost of improvement, and then what is the tax on short-term capital gains and tax on long-term capital gains, and then we have got a concept called as a stamp duty valuation. To this extent, we will take up in this particular session. What is a cost of acquisition and improvement, and which sections of the income tax law deal with this particular concept? Point is, there are two sections which deal with this particular concept. One is section 55 and another is a section 49. So, coming to the point of 49, it is a deemed cost of acquisition. When I say deemed cost of acquisition, why we are saying it as a deemed cost of acquisition? Because in all the situations covered by section 49, the present owner is not directly incurring any expenditure to acquire that particular asset. Like in 49, you might have studied at the PCC level, 49.1 deals with the situation of what? That is, asset acquired by the SSE, either by inheritance or by gift. Like such situations are being dealt by section 49. Anyhow, we will take up 49 independently. Coming to the point of section 55, here we are going to deal with all those situations where directly the SSE is incurring the cost. Then after the asset is acquired, naturally there could be some expenditure which we may be incurring. Apart from income tax law, what is a capital expenditure, what is a revenue expenditure is something which you might have already studied. See, capital expenditure is an expenditure which you acquired, which you incurred to acquire a particular asset, or any expenditure which you incurred to make the asset or to put the asset ready for its intended use. There is no much of a confusion in case if the expenditure is incurred prior to the acquisition. That is all capital expenditure. But in case if any expenditure is incurred subsequent to the asset coming into existence, how do you look at that particular expenditure? Is it a capital expenditure or is it a revenue expenditure? For that, what is the principle? Any expenditure which is being incurred after the asset is coming into existence, what we say, further expenditure in case if it is going to enhance the earning capacity, then we call it as a capital expenditure. This is what our accounting knowledge. Coming to the point of the taxation, there is a concept called as cost of improvement. So what is this cost of improvement? Subsequent to the asset coming into existence, any further expenditure incurred by the SSE comes under the cost of improvement. Here the noteworthy point is what? In the last session also we discussed about the indexation. In the last session we discussed about the indexation. We said base year is 81-82. Base year is 81-82. In case if the asset is acquired prior to 1/4/1981, our section 55 says what? What is the cost of acquisition of the assets which are acquired prior to 1/4/81? Either the actual cost or the fair market value as on 1/4/81. Now the point here is, in case if the assessee is incurring any cost of improvement in respect of an asset which he acquired prior to 1/4/81, and that improvement cost is also incurred prior to 1/4/81, that is to be ignored. Ignored in the sense what? To the actual cost you add that particular cost of improvement, and combined cost you compare with the fair market value as on 1/4/81, and naturally in case if the fair market value as on 1/4/81 is more, you are taking that fair market value as its cost of acquisition. So the point which I would like to convey is, whether the asset is acquired by the present owner or by the previous owner, and if the asset is acquired prior to 1/4/81, then cost of improvement we should only take such a cost which the present owner or the past owner incurred after 1/4/81. There is no problem with those assets which are acquired after 1/4/81. In case if the asset is acquired after 1/4/81, either by the present owner or by the previous owner, any cost of improvement in case if it is incurred, then that you are going to take it as the cost of improvement as a point. So to sum up the whole point, whether the asset is acquired prior to 1/4/81 or after 1/4/81, we should only consider such a cost of improvement which is incurred after 1/4/81 only, because in respect of the assets which are acquired prior to 1/4/81, since already fair market value as on 1/4/81, definitely in 99% cases, since it will be more, since you are taking the cost as fair market value as on 1/4/81, please don't consider cost of improvement which is incurred prior to 1/4/81 is the point. So take the point, cost of improvement, cost of improvement. Cost of improvement incurred on or after 1/4/81 is only to be considered. Reason: in respect of the assets, in respect of the assets acquired prior to 1/4/81, cost of acquisition is to be taken as actual cost brackets including cost of improvement, or fair market value, whichever is higher. Of course, in the law book it will be stated like at the option of the SSE. Naturally, the SC will take an option which gives him more benefit. That more benefit comes with taking a higher cost of acquisition as a point. So as far as this point is concerned, there is no problem in understanding. But we have to remember, in some circumstances, in relation to certain assets, there you are not supposed to take any cost of improvement. Why, sir? Because it is very difficult to ascertain the cost in respect of the self-generated assets, like goodwill of the business, right to manufacture, produce or process any article, right to carry on any business. In respect of these things, cost of improvement shall be taken as a nil is the point. Write down. In relation to the following assets, cost of improvement shall be taken as nil. A, goodwill of the business. B, right to manufacture, produce or process any article or thing, then right to carry on any business. Of course, friends, here a point which you should keep in your mind is, any expenditure which is allowed to be deducted against your business income or against your house property income or against your income from other sources, that cannot be treated as cost of improvement, and that cannot be added as a cost of improvement, because in relation to one expenditure you can't have two benefits. If a particular expenditure is already allowed there, that you are not allowed to add to the asset by saying that it amounts to cost of improvement as a point. Now I am coming into the core section 55, which deals with the cost of acquisition. So section 55 deals with the cost of acquisition. There are a few points, like, first, what we say, cost of acquisition in respect of capital assets like goodwill, trademarks, brand names, tenancy rights, stage carriage looms, stage carriage permits, loom hours, right to manufacture or produce or process any article or thing, right to carry on any business. These are all more of intangible assets. For these intangible assets, what we say, cost of acquisition is nil in case if they are self-generated. If they are purchased, yes, it is the purchase cost which is the cost of acquisition. So write down the point. In respect of self-generated intangible assets, generated while carrying on the business, shall be taken as nil. Next point, in case intangible assets are purchased by the SSE, then purchase cost or purchase price is the cost of acquisition, is the cost of acquisition. Right. Now here one important issue. Sir, it is a self-generated intangible asset. It is acquired prior to 1481. Now there is a principle. For assets which are acquired prior to 1481, what is to be taken as a cost is the actual cost of acquisition or the fair market value as on 1481. If that is the case, in case of the self-generated intangible asset like a goodwill, which is acquired prior to 1481, what should be taken as the cost? Is it to be taken as the fair market value is the issue? Write down. In case of goodwill of the business, tenancy rights, trademarks, associated with the business, which were acquired prior to 1481, the cost of acquisition shall be taken as nil. The cost of acquisition shall be taken as nil, and the principle of taking the cost or the fair market value, the principle of cost or fair market value as on 1481, is not available, irrespective of the fact whether such a self-generated intangible asset, irrespective of the fact whether such a self-generated intangible asset is acquired by the SSE or by the previous owner, See friends, after you come to the final, what is more important is the exception to the rule. At the PCC level, we expect you to understand the rule, but at the final level, we expect you to understand, remember, reproduce the exceptions. See, this is one exception, that is in case of the self-generated intangible assets which are acquired prior to the 1481, also the cost of acquisition is nil. So the whole point is what? Whether self-generated intangible asset is acquired prior to 1481 or after 1481, its cost of acquisition shall be taken as a nil. You can't go by the principle of if it is generated prior to 1481, the principle of cost or fair market value, whichever is higher on 1481, is not available is a point. Now in this context, Let me also tell one more exception here. See, for self-generated assets, prior to it is being brought into the section 55, there was a case, B.C. Srinivasa Shetty's case. In that, what happened is, like, he is making a sale of goodwill, and income tax department asked him to pay that capital gains tax. Then that gentleman said, sir, I am incurring a loss. What is it? I am only saying example. He sold the same for 1 crore. Now he says he incurred the loss. How is it possible? How is it possible? The argument of that particular SSC is that how you can ascertain the cost of acquisition. Yes, let us suppose Chakravarti is there for the past 20 years in the teaching. Now Chakravarti made some good name and got some goodwill. He want to now go and settle in America. Now Mr. Krishna Reddy want to purchase this particular academy or this particular academy, that is a business. Now he is paying 2 crores to Mr. Chakravarti. But Chakravarti says, 20 years of my useful life I spent here. Instead of spending here, in case if I opted to do a job in a foreign country right on the day when I got qualified, in these 20 years, every year I would have saved on an average, say 15 lakhs. So that is the opportunity cost. So it is a 3 crores. So 2 crores minus 3 crores, I incurred a loss of 1 crore. Yes, the case is fought from the stage of assessing officer to the stage of Supreme Court. Finally, Supreme Court accepted the point of B.C. Srinivasa Shetty and said, in case of self-generated assets, since it is not possible to ascertain the cost of acquisition, there is no capital gain. But friends, please do remember, after the department loses its case in Supreme Court, it will go and cry before the finance department and the finance ministry, and finance ministry in the next budget brought an amendment and said, in respect of the self-generated intangible assets in the business, the cost of acquisition shall be taken as nil. Once the law says the cost of acquisition shall be taken as nil, nobody can tomorrow go and say that, no, since the cost cannot be ascertained, I am not going to pay any capital gains tax. They can't say like that. So every amendment that is brought is having the very objective to plug in the loopholes in the law. So that's what yesterday also in the last session I said, don't defeat the purposive intent of the law. Right. Now continuing with this story, although amendment is made in section, that is although the concept that self-generated intangible assets, the cost of acquisition is nil being inserted in the section 55, they are not careful. Why they are not careful, sir? They only said self-generated assets in the business. So we as a professionals are still can play. Chakravarti doing a chartered accountancy profession, tomorrow if he decides to make sale of the goodwill which he generated while carrying out the business, whatever the money that he receives still will be out of the tax net. because BC Srinivas Shetty's case and the Supreme Court judgment still is valid in case of self-generated assets generated while carrying out the profession. This principle of self-generated assets cost of acquisition being nil is only applicable when it is related to the business and not to the profession is the point. So make note of the point. In respect of self-generated assets, acquired while carrying out the profession, cost of acquisition, since cost of acquisition cannot be ascertained, when they are sold, there will be no capital gains. Brackets you write Supreme Court judgment in BC Srinivas Shetty's case. Supreme Court judgment in BC Srinivas Shetty's case. Now friends, after we discussed in detail about the self-generated assets and its cost of acquisition, now I am moving to the next item in the balance sheet. In the balance sheet, first item is what on the asset side? Fixed assets, which includes both tangible and intangible. Now the next item is the investment kind of thing. Shares. So with respect to the shares, what are the points that we should have the clarity? Right shares, bonus shares, how to calculate the cost of acquisition, what are the related issues. See, point here is, what is right share, what is bonus share? What is a bonus share is capitalization of the profits. Without taking any money from the shareholder, company is converting its profits into the shares and giving those shares to the equity shareholders. It's a bonus share concept. Right share is what? The existing shareholder has got a right which is given by the Companies Act to be offered whenever company want to make any further issue of the shares. So in case of the bonus shares, what will happen friends? SSE is not paying anything to the company. So that is the reason why in case of the bonus shares, the cost of acquisition should be taken as nil is the point. Similarly, in case of the right shares, whatever the cost that he is paying to the company, that should be taken as the cost of acquisition. Let us suppose I am purchasing the right from the existing shareholder and then I am paying to the existing shareholder to purchase the right, I am paying to the company to acquire the shares. Then whatever that I paid to the existing shareholders to acquire the right plus whatever that I am paying to the company put together becomes the cost of acquisition. Now here there is an intangible asset. What is an intangible asset in case of the right shares? Let us suppose I am the existing shareholder of ABC company. Now company is going for further issue of shares. Now as a present shareholder, I am having a right to subscribe the shares, but I don't have the money. So I want to make sale of this right to Archana, and I am going to make sale of this right to Archana and is going to receive the amount. Then how to calculate the capital gains? There also what we said, when you are making sale of a right, you are not incurring any specific cost to acquire that particular right. So the cost of acquisition of right to subscribe for the shares is also to be taken as nil, and the entire sale proceeds will be treated as a capital gains as a point. Now another important point is, let us suppose the bonus shares are acquired prior to 1481. Bonus shares are acquired prior to 1481. How to take its cost? There of course law is kind enough. Unlike the self-generated assets where that principle is not applicable, that you can take a cost or fair market value as on 1481. In case of the bonus shares, friends, please do remember, if they are acquired prior to 1481, the cost of acquisition of them should be taken as the fair market value as on 1481 is the point. So these kind of points you should remember, write down. In case of bonus shares, cost of acquisition shall be taken as nil. Exception, write down, exception, in respect of the bonus shares, acquired prior to 1481, cost is to be taken as fair market value as on 1481, cost of acquisition of right to subscribe the shares is to be taken as nil. Then in case of right shares subscribed, cost of acquisition shall be A, in the hands of the original shareholder hyphen amount paid to the company, to acquire the shares. And in case of others hyphen amount paid to acquire the right, from the original shareholder, plus amount paid to the company, Right, friends. Before we get into the other issues with relation to the cost of acquisition, let us also quickly complete that concept of what is a long-term capital asset and what is a short-term capital asset. Already we discussed what is a capital asset. What is capital asset? Capital asset is a property of any kind, whether it could be movable or immovable, tangible or intangible, whether held for the purpose of business or a profession or not. Now, what is a long-term capital asset? What we are saying, any asset which you acquired, where the period of holding from the date of acquisition to the date of disposal, if it is 36 months or more, it is a long-term capital asset. If it is less than 36 months, it is to be taken as the short-term capital asset. And the noteworthy point there is, irrespective of the period of holding, all depreciable assets are short-term capital assets. Of course, there is an exception to the rule of that period of holding to be 36 months is in respect of the shares held in a company, in respect of any security listed on a recognized stock exchange, in respect of the units of the Unit Trust of India, in respect of the units of the mutual fund, and in respect of the zero coupon bonds. The period of holding, if it is 12 months or more than 12 months, that is enough for us to say it's a long-term capital asset. And in case of the period of holding is less than 12 months, it is to be taken as a short-term capital assets. I am not expecting you to write this particular point because this is one which you already studied there at the PCC level. Friends, let me again and again tell you, the very objective in asking you to jottle down some points is, first is, once you start writing, whenever you are listening an e-video like this, there will be some sort of continuity and you don't get sleep. Second thing is, more than what you listen, what you write will be permanently going to be recorded there in your mind is a point. Ultimately, it is not I am going to give you some expert knowledge. The very objective of my lecture is to give you what is required from the examination point of view. As a final student, which points you should definitely have a conceptual clarity and should remember. Only those points where you need to remember, we are making you to write the notes, and kindly bear with us. Now, having discussed that, now I am slowly moving to the another beautiful concept. What is it? Cost of acquisition in case of demutualization. Demutualization. What is that demutualization? Point here is, stock exchange is there. Earlier, how the stock exchange used to be? Not in the corporate format. Some big people in the city used to come together, form an association, and it is an association of a person. And once you are a member of a stock exchange, you have got two rights. One is a right to participate in the trading on the floor. Then at the end of the year, we will prepare a profit and loss account of the stock exchange. If there is a profit, as a member, you have a right to share that particular profit. Now, government is encouraging what? Encouraged what? Corporatization. That's the reason why we have in the income tax law, sole proprietary concern being converted into company, partnership firm being converted into company and all. Of course, again we are back to the square. We brought the concept of limited liability partnerships and encourage the unlisted to get into the, what is it, limited liability, right? Anything that is going to happen by breaking the normal course again will come back. Don't you think so? Yes. When I am preparing for the CA, BCom is the qualifying exam to pass and make an entry into this particular profession. Later the institute brought the beautiful concept called as a foundation, then it is a PE1, then it is a CPT, and no entry for the graduates or postgraduates without passing the CPT, and no articles till what is it, your PE2 being completed. Now they said IPCC group 1, a day is coming now and it is not very far off. Again back to the days when Chakravarti did his chartered accountancy course. The same way graduates are now going to be given direct entry into the what is it, IPCC, and they can simultaneously take up the articles. Fashions also like that. Today what the girls are wearing, these fashions are the fashions of 40-50 years back. Anything, it will come in a circular manner. So back to the point. Point here is stock exchange, I am a member and it is being in the form of the AOP. Now this AOP is getting converted into corporate company, stock exchange in the corporate format. Now being a member, I am getting the shares in that particular company and I am also getting a right to participate on the floor of the stock exchange. So I am getting two assets. One is a share, another is a right to participate. So what is the cost of acquisition of this particular trading or clearing rights, and what is the cost of acquisition of those shares which I acquired? Cost of acquisition of the shares is the cost of acquisition of this particular membership. As far as the cost of that trading rights and clearing rights, the cost of acquisition shall need to be taken as a nil is the point. Write down the point. That is, in relation to capital assets being equity shares, or shares allotted to a shareholder of recognized stock exchange in India, under the scheme of corporatization of stock exchange, under the scheme of corporatization of the stock exchange, cost of acquisition shall be the cost of acquisition of his original membership, Then friends, next point, cost of acquisition of capital asset being trading or clearing rights, of the recognized stock exchange shall be taken as nil, shall be taken as a nil. So three aspects I covered. One is self-generated assets, self-generated intangible assets. Second is bonus shares and the right shares. Third is this corporatization of the recognized stock exchange. Normally in relation to any other asset which is acquired prior to 1481, cost of acquisition or fair market value as on 1481 shall be taken as nil. That also as a point you write. In relation to any other capital asset, in relation to any other capital asset, acquired prior to 1481, acquired prior to 1481, cost of acquisition shall be taken as, cost of acquisition shall be taken as what is it? Cost or fair market value at the option of the SSC. At the option of the SSC. Of course, he will opt for more only. Then friends, already I explained one point that in case if the asset is acquired in the mode specified under section 49(1), cost to the previous owner is the cost to the present owner is what is being stated by the section 49. Now the issue before us is, my father acquired a particular building prior to 1481 and he died in 2008, and on inheritance I got such a property. Then what shall be the cost? What is the cost which my father incurred, or the fair market value as on 1481, whichever is a higher, that is at the option of the SSC. Write down where the capital asset, became the property of, capital asset became the property of the SSC, property of the SSC by any mode specified in, section 49(1), section 49(1), and the capital asset became, the property of the previous owner, became the property of the previous owner prior to 1481, then the cost of acquisition in the hands of the present shareholder, present holder or the present owner, then the cost of acquisition in the hands of the present owner shall be taken as cost to the previous owner or fair market value as on 1481. Right. See, to sum up all these points, we can have some practice problems, right? Of course, if it is accounts, yes, problem runs in pages. In income tax, it won't run in pages. I expect my beloved students to make note of the problem also, not only solution. Take first issue. Mr. Karthik purchased tenancy rights on 1/1/2003 for rupees 1 lakh. The same are sold by him on 1/1/2012 for rupees 5 lakhs. Compute the capital gains. Friends, try to understand the point here. The whole objective in doing all these 7-8 problems is only to have a better understanding of what we have studied. So when we say tenancy rights, it is an intangible asset, but it is not a self-generated. Had it been a self-generated, the cost of acquisition should be taken as nil. If it is a purchased intangible asset, we have to take what? We have to take the purchase cost as the cost of acquisition. And I expect the students to remember two things as far as inflation index is concerned. One is the base year index 100 and the current previous year index is 785. Rest in the problem itself they are going to give you, so don't take such a tension. So for the financial year of 2002 and 3, the index is 447. Index for 2002 and 3 is, what is it? 447. Now, before we compute this particular capital gain, first what you need to understand, is it a long-term capital asset or a short-term capital asset? It is a long-term. Why it is long-term? Since the period of holding is more than 36 months. So, presentation of the answer is most important, right? Because at the final level, we are not bothered about your correct answer. We are bothered about your presentation style. For that you practice. Write down. Assessment year, main heading, assessment year 2012 and 13. Period of holding 1/1/2003 to 1/1/2003 1/1/2012. 1/1/2012. Sale price 5 lakhs less indexed cost of acquisition, 1 lakh divided by index of the year of acquisition, that is 447 multiplied by 785, makes it to what? 1,75,615. 1,75,615. Thereby long-term capital gain. See, at the final level, even a small mistake like this also could be viewed as a very blunder. Some people, they don't have the habit of giving full information. See, if you are going to prepare some note, tomorrow you are all going to become chartered accountants. You prepare some note and give to your higher up. Again, that higher up should not call you and ask in that particular note what you have written. So you should be very careful that whatever you write and give to the other person must be self-explanatory. So if you just leave like that without writing a long-term capital gain, at BCom level we will excuse, at PCC level we will feel bad, and at the final level we will punish. Right against that difference of 3,24,385, you write long-term capital gain. Long-term capital gain. Right? That is the reason why in CA exam, in a BCom exam, costing we get 99. But we don't see many people getting 70 also in costing at the final level or in CA exams. Because it is not just the correct answer that matters. We want to see you as a professional. Professional means professional presentation should be there. What you write must be legible and self-explanatory. So take care of the presentation. At the final level, when you are preparing a balance sheet of a company, if you don't give due consideration to the Schedule 6, even if the answer is correct, I am not supposed to give you the marks. You are writing current assets on the top, fixed assets below. When the pro forma used to be like fixed assets first, lastly the current assets. So be careful. Next question. Now, Mr. Nagendra purchased route permits on 1/1/1979 for rupees 2 lakhs. The same was sold by him. On 20/1/2012, 20th day of first month 2012 for rupees 20 lakhs. And fair market value of route permits, as on 1/4/81 is equal to 5 lakhs. In each illustration, we want to make you to learn one point. That is, earlier we made you to learn what point for self-generate, that is for intangible assets which are purchased, the cost of acquisition is the purchase cost. Here what point we want to make you to learn? In respect of the assets which are acquired prior to 1/4/81, the cost shall be taken as a actual cost or fair market value at the option of the assessee, whichever is higher he takes. That's the only point I want to make you to learn. So write down assessment year 2012 and 13, assessment year 2012 and 13, capital gains on sale of route permits, nature of the asset, long term, sale price 20 lakhs, less indexed cost of acquisition, 2 lakhs divided by 100 into 785, makes it to 15,70,000. Thereby the resultant balance, you should write it as long-term capital gain, that would be 4,30,000. That would be 4,30,000.